Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, October the 4th, the year's 2020. Let's talk trading. It's time for the weekly open and gap. Just so you know, these videos are for educational purposes only, and your results may differ from mine. And let's just make sure this week that you don't lose any more on any one particular trade than you're willing to lose, that you have your risk management in place, which means your position size is proper and your stop loss is proper and your risk is proper for your account size. So let's take a look here. Well, we filled the gap on the pound dollar, the open gap. It wasn't that big, but you can see there's some nice gaps that still need to be filled. So look for opportunities throughout the week if you are so inclined. Now you can see first day of the month we had a huge range, and the previous day was an inside bar. So it looks like we already attempted to break that high on the inside bar once. We might try it again, so be on the lookout. 308 pips below the yearly open on the pound. And once again, showing the inside bar. You can see on the weeklies, we've had lots of inside bar action, including the pound here from the inside bar 3 weeks ago. But we had a lot of inside bars happen on the week last week. And there's still some inside bar action on the month to look for. Range so far today, only 42 pips on the pound, nothing breaking 100. We're 7 hours into the trading day. Buy zone pivot was below the short zone here, but we had gapped down. So you have mixed signals if you trade those biases. But we did close that weekly gap. Rats range is large enough, but there's not much distance between. I'm trying to remember if in the new rat zone indicator, how did I do that? How did I compute? Yeah, the threshold, the breakout pips. Trying to remember how I computed whether or not the range was large enough, and if that was part of an input. I guess I might have to do a little update on that indicator. Pivot point, you can see here why is that on H4? We've got the weekly pivot here, 1.2887. The daily pivot, 1.2907. So we want to look for these pivots to be taken out. Daily missed pivots. So far, we haven't hit today's pivot, but we did have 4 missed pivots last month. You can see got some missed pivots that need to be taken out. Oh, I forgot. Let's look at the weekly. You can see here we only had 1 missed pivot last month and 1 back in July. So far, need to take out this pivot. We're in the upper wick zone right here, looking to break out from yesterday's or the Friday's high, and the Friday bar was an inside bar, the daily bar that is. And looking at the ranges, once again, early in the trading day, nothing to write home about. But there is something I want to talk to you about when it comes to the ranges. Normally we look at the high minus low and we look for that to hit a certain percentage, like usually somewhere between 75-80% or more, before we like to start looking for reversals. where you might want to pour it on and do the mega trade or the Magilla trade. But there's something else that we should consider, and we should consider the range high minus open and open minus low, because that kind of splits the range. So you might have a large range, say 100 pips, even though that's really not that large on the pound. Let's just say it was 150 pips. But it really depends on where price is versus in that range. Is it above the open, below the open? Has most of that range, was it above or below the open? So for example, if we have most of the range below the open, but price is going up, there still might be more room in the high minus open area for price to expand. On the other hand, if most of the area is below the open and we got a red candle, and there might not be much room left for the open minus low. So that's just another way to further analyze the price action and make maybe make a better call or judgment to take a trade or not. And once again, I'm a statistical trader. Some traders are technical traders. Some traders are fundamental traders. And so I'm always looking at these statistics just to see if I can just get a little bit better edge or find something that I haven't seen before. Oh, looking at just one of the simple trading screens here. We're 10 minutes into the hour. So you can see what do we have. I'm looking for the Walmart lines. Looks like at 20 and 40 right here. Price is at 40. We got a 3-ball here, 2-ball here, 2-ball here. Doesn't really look like a trade I want to take. It's not the right time of day for me to trade here in the maybe is it even early London session yet? It's not a time of day I want to trade. And you can see here on the price action screen once again, had some nice movement here across the sweet spot line here. Some more movement here across some sweet spot lines. So even if you do trade these hours, there are opportunities. But if you're trading during the Asian session, you probably want to trade either a yen pair, an Australian pair, a New Zealand pair, because they're a little more active than, say, the pound dollar at that time of day. And I'm trying to remember, I don't really think there was any questions I saw over the weekend per se. Some traders were still wondering where they can find the indicators. They're on Crestlick.com. I did post a couple on the Facebook group. I did kind of break my rule. I only like to put code in one place. That way, when I make a modification or fix a problem, I only have to put it in one spot. Otherwise, now I have to remember, did I put it here? Did I put it there? Did I put it someplace else? It's just a nightmare. So it's much easier to post code in one spot and then send everybody to that spot. Now, other traders ask about the donation indicators. Well, once again, you can find out how to do that either on the Facebook page for the TheRumpledOne Never Lose Again group page, or go out to Crestlick. And what's kind of interesting and kind of neat is that there's still traders over on StockFetcher still using some of my filters from when I was coding filters and trading the equity market stocks. And there was one other thing I wanted to talk to traders about. I still notice traders, especially beginning traders, wanting to trade more than one pair. And you're just not going to have any, you're not going to have sustained um, profits by doing that. You're really not, because you're really not learning the pair. You're really not learning the instrument. I mean, think about it. If you were going to a band and you spent some of your time playing guitar and some of your time playing drums and some of your time playing the horn, some of your time, singing, um, you're not going to get really good at any one of those things. Now, there's some people who have natural talents and they can do that. And some people, they don't have the natural talent, or they might have some but not as much, so they have to work at the skill, and they do that by practice through repetition. So for example, when I look at this chart, there's something that jumps out at me, and I'm wondering if you see it too. But you see, and it's something I had mentioned earlier about the pound, and this can only happen by trading it, day after day, week after week, month after month. How I notice how it likes to usually launch off the 40 line. Well, you can see here at this 40 line, it just so happens to be the Walmart line this hour, price failed to launch here. But, but if you come back down here, you can see what happened at the 40 line. It launched. And then if you scrunch up the chart, you can see once again how many times it has launched off of that 40 line. And if you scrunch it up even more, you can see here down at the 2740. It's just something about that number that I noticed, just like Walmart noticed what happens around the 60 line. Now, he's been trading the pound a lot longer than I have. Because when we got together, I had been trading the yen for I don't even know how many years. But I had traded the pound before, so I switched over. But that's just something that you only learn that by trading the same pair over and over and over again. And the thing is, you don't need to trade different pairs to make money. You don't. And once you get, a number of hours in front of the chart, you're going to start to see things, and you'll be able to say, no, I don't want to take that trade, or yes, I want to take that trade, or I should wait. This is not the time for me to trade. But that can only happen, by sitting in front of the screen. And I heard another trader say that, that if they give you their trading plan, don't expect to do it and execute it right. And I think that gets down to something I'll probably talk about in another video. And I kind of alluded to it earlier. It's like there's skill and there's talent. And I think trading is kind of a combination, because trading's not like baking a cake. I mean, we can give you the recipe for a cake, and if you follow it to the letter, and assuming you're in the same altitude as the person who's writing the recipe, you should be able to pretty much get the same results. Okay? Might take you a little practice. Maybe you didn't beat the eggs enough or something. Or maybe you forgot to, put the dry into the liquid instead of the liquid into the dry, or vice versa. It just depends on the recipe. So there's those little things that you learn through experience, what works, what doesn't. Or it's like if you learn to play a sport, you can watch all the videos and read all the books you want, but you got to get out there and swing the bat or throw the ball or catch the ball. It's the only way you learn, shoot the ball through the hoop, or, hit the puck into the net. There's just some things you have to do. And trading's one of those things. The way to learn to trade is by trading. Okay, there's different methods and approaches. And I'm going to leave you with that thought, because you see, it's not what you trade, it's how you trade it. So go out there and drain the banks this week. This is TheRumpledOne, over and out.